Hello, and welcome back to the Fintech Takes podcast. We have a very special Super Bowl themed edition for you this week. Obviously, the Seattle Seahawks just got done beating the New England Patriots in the Super Bowl. And while the sporting event was interesting, the advertising is almost always the more interesting part. I consider myself something of an amateur Super Bowl ad watcher. And I wanted to talk about what we saw in the Super Bowl and more broadly, kind of what we think it means for the economy, for fintech, for banking, for AI, which is sort of eating all of the above. And there was no one better to do that with than Jane Barratt, Chief Advocacy Officer at MX and a fintech friend of mine. Jane, in addition to being a brilliant thinker and executive on all things open banking, is also someone who has a deep background working in the advertising industry. In fact, and we'll post this video out on socials, she used to go on CNBC the day after the Super Bowl and critique and rank all of the ads that ran in the Super Bowl as a member of the advertising industry. So in some ways, this was kind of like stepping back in time for Jane. I asked her to do exactly the same thing, take notes on the Super Bowl, figure out which ads you liked, which ads you didn't like. And we gave out some awards on the podcast for the ads that spoke to us the most, the ads that annoyed us the most, the ads that confused us the most. And then we segued into kind of a broader discussion about the AI-ification of everything. I would say this was definitely the AI Super Bowl in terms of advertising, and the fight between Anthropic and OpenAI, Google's, from my opinion, very, very effective ad, and what we think all of this means for the future of fintech, financial services, and the economy overall. If you know Jane, you know that she was the perfect person to have on for this kind of wide-ranging discussion. I also did keep her on a little late for a 10-minute kind of quick download on everything happening in open banking, which was really interesting. So overall, great episode. First time we've ever ranked ads from the Super Bowl here at Fintech Takes, perhaps not the last. I hope you enjoy this episode with Jane Barratt, Chief Advocacy Officer at MX. Okay, Jane Barratt, welcome back to the Fintech Takes podcast.
Great to be here, Alex. Thanks for having me.
I'm delighted to have you, and I must start by saying thank you because I think I texted you like literally yesterday before the Super Bowl was happening, and I was like, Jane, I sort of want to talk about commercials and advertising, and obviously the Super Bowl is like, I mean, it's the Super Bowl of advertising, and so like there's a lot to talk about. It segues into some other sort of related areas that I want to talk about, and I knew this before I sent you the text message. I knew that like you were the queen of advertising. You used to work in advertising. You have a tremendous amount of thoughts and experiences around like the advertising industry and how it overlaps with data privacy and data ownership and open banking and AI. So like, I was like, Jane's the perfect person to talk to about this. What I did not know is that you also, in your previous roles working in the advertising industry, used to go on live television and review ads from the Super Bowl the day after. Can you tell that story quickly before we get into it?
It was A, so fun, and B, so stressful. Like while everyone around me is enjoying the Super Bowl, I'm like taking notes furiously and like trying to come up with a really crisp point of view before, you could read anyone else's point of view. So we are recording this the day after the Super Bowl. So by the time this airs, I'm sure some of these things have been well hashed, but it was really fun to be able to see just such creativity, like such investment, and often things that would make you furious or sad, but all like wrapped up into a couple of hours. So yes, that was my previous career, and it was a lot in technology, but I did also work on Madison Avenue and got to represent the industry's point of view on just how, like the post-game wrap-up, which again, apologies to any football fans, but I would often fast forward through the game. So sorry.
Well, I was going to ask you about that because I texted you before the game. I didn't want to ruin your Super Bowl watching experience. Now Alex has given you homework on like which ads, but I mean, the podcast is casual. We're not going to be on live television or anything. Do you have any like thoughts or feelings at all about American football, or is it all just nonsense to you? You live right now in Utah, so like
I do.
I've
been in the US for 23 years now, and yesterday I learned that the game is only 60 minutes long. What the hell? How does it take 5 hours? So yes, I have thoughts. Being Australian, I am used to more like a fast-paced game, like not so many stops and starts. So, but yeah, when it's done well, like you watch, it's like soccer. You watch for the moments, right? Versus the starting and the stopping and the starting, and the moments are amazing. So I do have thoughts, but if you could hurry it up a bit, would be great. Not this podcast. Hurry up the game a bit.
No, that is totally fair. We don't have a football team in Montana, so I sort of like am less professional football team. So I'm less emotionally invested in the game because I have teams I kind of like, but nothing's like life or death. And so I do enjoy watching the game, but I think my lack of like emotional investment in the game itself does allow me to like watch the game and then watch the ads and like never feel like I'm like, I don't ever need to take a break from like the drama of it because I'm not caring too much about one side or the other. And I will say, you know, this game in particular, it did seem like there were a lot of stops. There were a lot of commercial breaks. We maybe have time for the halftime performance commentary at the end. But Jane, what we're going to do for this podcast, what I asked you to do was to prepare some awards. We're going to give out some awards to ads running the Super Bowl yesterday. And these are the very prestigious, just made up 5 minutes ago, Fintech Takes Super Bowl Advertising Ad Awards. We have the following awards, and I would like to hear your selections for each, and then I'll share mine, and we'll see if we overlap at all, or maybe we disagree. I don't know. I'll be curious.
Oh, good.
We have Best Use of Money, which I would sort of translate to be like the best ad, but also the best ad with at least a little bit of an eye towards is it an effective advertisement as well? Because you never want to be the one where it's like, oh, I loved that ad. What was it for? So like that's like the nightmare that haunts marketers. You don't want that, but you do want like a good quality. I think in the video clip of you sent me of you reviewing 2011 Super Bowl ads, like you want a narrative, you want a little bit of like a story, right? So best use of money. I think the contrary ad that I also want to get into is biggest waste of money because these ads are expensive. Not just the ads themselves, but also like the surrounding, not just production costs, but like you have to buy other time with the broadcaster. And like it's a whole commitment. You have to get talent. So lots of money in. Who wasted their money the most? Most cringe. Which as Jane, neither one of us are in Gen Z, so I don't know if we're qualified to, opine on
we'll take a
most
stab.
Cringe. We'll do our best. Most wholesome, which I do feel like kind of going to the storytelling aspect. Since having kids, certain things tug at my heartstrings in a very different way than they used to. So most wholesome, and then finally, maybe my favorite category, the I liked it category, which I'm referring to as the one where you liked it maybe more than the consensus or more than the people you were watching it with, but it just worked for you. So, Jane, let's start at the top and work our way down. For best use of money, what do you got?
I'm totally going to break the rules straight away. I'm going to give first, second, third. But okay. I thought
I like it.
that Levi's brand has some of the shine had fallen off the brand over the last couple of years. I think it was beautiful. It was unmistakable Levi's. It was energetic. It was confident. It was super fun. Great music. Loved the people in it. So I think they, in my mind, win best use of money because it was just so clear on the value prop. Everything looked amazing, right? I think and I don't know how much they paid, but Ramp, I think the only fintech that showed up, when you go in before kickoff, I don't know if you were watching pre-kickoff or pre-coin toss. So they had Kevin from The Office. It was cute, but in terms of use of money, the fact that they were before the $8 million slots, I thought that was very, very smart.
Good ROI, good ROI. Which ROI. Ramp, that's what they do. So that makes sense. Okay.
Exactly. And then related, I don't know what showed up in the Montana feed, but I thought the Utah companies that showed up, which is around like a $40,000 spend for media versus a $8 million spend. I thought the local ads, and especially the banking community, they showed up in a really good way. It was Tab Bank, America First Credit Union, Utah Community Credit Union, who else? Mountain America was there. Like that actually was great from a best use of money perspective, because guess what? They're great local brands and they showed up with really quality creative on the day.
That is very cool. Okay, so reacting to that really quickly, first of all, good job doing more homework than I even asked you to do. Second of all, I agree with you. No, I love it. I mean, the Levi one I thought was great. It was really good. It was in like a primetime spot, and like that's just like your classic like brand advertising, right? Like we sell a product that lots of other people sell. People buy this because of how it makes them feel. What do we want them to feel, and like how do we want that to come across? I thought it was just extremely well done. The other thing I find interesting, Jen, I don't know if you have a quick thought on this, is length of Super Bowl commercials is really interesting to me, because like obviously how much length you pay for is like really a function of how much money you can spend. But it also is like, can we match our creative vision to the right time? And I did find, and this will probably come up in our awards later, I did find several awards were either like too quick. Yeah. Like some ads were too quick seconds. Or too slow. Yeah. Or like there were other ones where it was like, okay, I get it. Can we like stop with this now? Like, so having a story that fits within the time slot you paid for and doesn't feel like rushed or too slow, there's kind of a little mini art to that. And I thought Levi's really nailed that as well. Yeah. Ramp, I didn't actually see because I didn't get the game turned on quick enough. So I didn't see it live, but I did look it up afterwards, and I had been familiar with their campaign they were working on. I thought it was very good. I thought it kind of like explained how they're using AI agents without ever saying AI, which was kind of smart, right? Like functionally like replicate yourself a bunch of times to get all the work done you don't want to do. That's like the AI pitch.
It's a good promise.
Yeah, and like they're not AI, but they're using AI a lot. And I thought like their ad conveyed that without them having to explain that. So I thought that was really good. And then what was your third one again? Remind me.
Oh, it was just our local banks in Utah.
Yeah. Oh, that's right. Yeah.
So that wasn't a single. It was a broader observation.
Right. I liked that one too, and I don't really actually remember all the Montana ones we saw, but I will say just in general, first of all, I'm interested that there were so many banks that advertised in the local slots for you guys. That's fascinating. I don't think we had nearly as many in Montana from a banking perspective, but that has to be like the most stressful creative ever, right? Because like 40,000 is still a lot of money, and like you don't have access to the same like resources for like really great creative that you do when you're spending the big bucks. So I sometimes find those ads to be like, oh, we paid for the slot, but we have no idea where to go or what to do for the creative, and we only have like a week to get it done. Like sometimes they feel that way, and it sounds like yours didn't feel that way at all.
Not even a little bit.
Okay, those are all very good. All right, so best use of money for me, and AI is going to be a theme that comes up multiple times, but I thought Google's was really good. So Google Gemini did their AI ad, and the thing I liked about it relative to a lot of other ads across multiple categories, and AI in particular, is they didn't make it at all about like AI or how like science fiction-y it is. They honed in on a very like real, personal and very emotional example, which is a family moving to a new house and a child in that family being nervous about moving to a new house, and the parents trying to like reassure them that it's going to be okay, and using like Gemini to like show a picture of the new house and then show what the kid's room will look like in the new house. And I thought like that did a good job. It had good like storytelling elements, because it had like, oh, what about the yard? Oh, can we put a trampoline? And the like mom starts to type in trampoline, and then she's like, no, wait, we're still not doing a trampoline. So like it was kind of funny, and I thought it did a good job of like explaining the product, I guess is the other thing that I critique ads a lot, where I'm like, you didn't tell me what it is you do or why it matters, right? And this was very clearly.
But how do you go get it and do this? I think that's often a missing step too.
Right. So I thought that, Google, I mean, I guess they've been on a bit of a tear lately in terms of success with just AI and their AI strategy, but I thought the ad did a great job of like making it just feel warm, simple, approachable, not scary, obviously useful. So I would say that was probably the best one I saw.
Nice. It was. I agree. Very human.
So, yeah, I thought so too. All right. And obviously Google can afford it. Okay, now for the one that's more fun, maybe. Biggest waste of money. Jane, what do you got?
Gemspark. Hated it. Do you know what I'm even talking about?
I don't know that I remember this one. No. Explain this one.
They actually played it twice. It was Matthew Broderick.
Oh, my.
Now, does that make sense?
Okay.
No, you didn't see that still? So it's Matthew Broderick saying, Gemspark, it's another AI tool, and it does your job for you so you can take the day off. And it literally, so I'm sure you've heard this as well, is one of the biggest barriers to people adopting AI tools is that they think that the tool will replace them. And unless you've got a very focused, like top-down AI usage strategy within a company, like we do have at MX, it is a real challenge to get people, like just regular humans, to adopt these tools because they're like, well, if I use it and I train it really well, what's to stop this tool replacing me? And so I think it actually tapped into the most negative zeitgeist, which is, oh, crap, if I use this tool, I'm going to lose my job. And the fact that they would have spent, a couple of million on Matthew Broderick and then 2 spots to run this same ad, stupid.
Ooh, that's a good one. I didn't even see it, which either means that I was putting my kids to bed at the wrong moment for them, or like their ad was just so bad my brain just filtered it out entirely. But I will also say the other thing that's interesting about that is, and I think this maybe is really, really important. I don't know if it's come up in your previous commentary on Super Bowl ads in your past, but if you're a brand no one knows and you make the leap of advertising in the Super Bowl, you have to nail it, right?
Oh, yeah.
Like an okay-ish to like neutral ad, if you're a really well-known brand, probably it still like accrues as positive brand value overall. I mean, it sounds like this one was like not good and that it wasn't delivering the right message, but even if it had been kind of like forgettably neutral, like that's not going to help you if no one knows who you are, right? Like the only way to win, I think, if you're doing Super Bowl advertising and you have a brand like that no one knows, is you have to like come on stage and you have to be memorable in a good way and crush it and walk away from it. And it sounds like again, I didn't see it, but it sounds like this is one of those ads where like the best they can actually maybe hope for is that people didn't see it like me and they don't have like negative associations with the product.
Or maybe it was targeting bosses to say, this is how you replace your team. Maybe that's what they were actually going for.
That could be. And actually that's going to come up later because I want to ask you about an ad that I think maybe was not tuned for the right audience, even though it was a good ad. But let me give you my biggest waste of money. And I'd be curious where on the rankings of bad ads this one rated for you. I thought Coinbase wasted all of their money on that ad. I will say that it was attention grabbing. So I mean, the thing you always say about like crypto or the Robin Hoods of the world is they're good at like attention hacking and like understanding the human brain. So I think on that front, yes, I do agree. I definitely stopped what I was doing and watched and sung along. I think the people I was watching with did the same. It sounds like from what I've heard in the aftermath, that was true across a lot of households that were watching the game. But it's really instructive because you have no idea what it's for. And you're watching and you're watching and you're watching as the Backstreet Boys play. And you get to the end. And by the way, one thing that they did before you get to the end is they changed some of the lyrics in a subtle way, which I have to say, like, if you're going to do it, just do it. Don't like wimp out and like change the lyrics and like make it more PG. Like, please don't. But second of all, it got to the very end and says Coinbase and like cryptos for everyone or something. I can't remember what the tagline is. And like in my living room, we all were like, boo, like feeling very like we got the rug pulled up from under us, which is something that happens in crypto. And then the next day when I've been looking around today at like ads, winners and losers and that kind of stuff and what other people thought, there were multiple videos surfacing of people watching the commercials in their household, seeing that ad and also booing when the Coinbase thing came up. And I just think like, if you're doing an ad that doesn't explain what your product is good for, and at the end of an otherwise entertaining or interesting or novel ad, everyone boos when they see your logo, like that's probably not great.
No, I think there's I mean, I have within just the broader financial services commentary, I may come back to this, but 100% agree there was no payoff. And in fact, the payoff was a negative one. I think there was an element of palate cleanse, which I'll give the one thing that it did go in its favor was everything is so jammed to be able to go, oh, okay, this is funny. I haven't seen graphics like this since like early 90s, but okay.
Well, and you kind of relax a little bit. Like I felt like the pace of my brain slowed down for a second while it was on. So it did catch my attention.
But again, it made you boo. That's bad. And there was also like,
literally,
there was
out loud.
I think there was a little bit of here's what I heard, which was probably overthinking it, because there was so much backlash against crypto advertising in past years, especially with the wild swings of value in Bitcoin specifically. I think it was like, hey, we're back and, we're here and friendly. Like, I think it was an attempt at repositioning, but it was just too jarring between the song, the graphics, and then the logo payoff.
Yeah, that's how I felt too. And I will also say just on your point, and I guess these are the kind of things you can't totally control, but it's the risk you run. Crypto is down hugely recently. And so I also think that like, if your experience as a customer recently with Coinbase was like checking Coinbase every couple of weeks and like just seeing red and down, then probably seeing that commercial probably didn't like in any way like add to or solve that problem. And again, that might have been something that was out of their control. But, the flip side to it, and I think this is important to state, is just like, did you not have any way to emotionally position how this product could be used in a good way to help people? Like, was there no emotional storytelling available to you? And so you had to do this instead. And to me, like, that's the problem, right? I mean, it kind of goes back, I think, actually, I keep referencing this clip of you on CNBC from 2011. I'm going to post this like online so that people can see what I'm talking about. But one of the ads, there was lots of ads for car companies in that one, if I'm recalling correctly. And was it Chrysler was the one that you sort of gave like the top award to?
Oh yeah, it was the M&M one. For the
M&M one.
It was like the rebirth of Detroit. It was awesome. It was the big coming out. Like, Chrysler 300 just launched. It was a big year.
Yeah, so it's like this really cool, like Detroit is back kind of ad. And it just sort of made me think like in that case, like, again, it's not like people couldn't have like negative feelings about a thing, but it was like kind of, there was like this getting back to its roots kind of like, this is actually like a core part of like the optimistic part of America and living here. Like it just tapped into like a storytelling idea that was really powerful. And it's just very telling to me that crypto just never has done that and doesn't seem able to do that.
Yeah,
I think and that's probably a broader commentary on the space. But
it's not just the crypto space. I think, again, you talk to Google, it's taken a long time for them to get to a really emotional space, but often tech people would have made the worst clients because it was really hard to just connect on the human level when everyone around you is a builder and it's all about the tech and the tech will solve everything. And so, it can be sometimes a very challenging leap for, this, whatever the latest wave of technology is, and there's always a latest wave, you lead with the tech. Right. And that's it. And then the brand. I mean, there used to be a famous saying in Silicon Valley, which is advertising is the price you pay for a crappy product. Which go tell Apple that, who have had amazing advertising from day one. So sure.
Totally. No, I think that's right. I mean, I don't know. In tech, you see this attitude a lot where it's like, oh, as long as the product is amazing or the technology is amazing, everything else we do can be excused. It's like, as long as this is good, everything else is okay. And I just think, like, to your point about Apple, that's not how great companies are built, right? Like, great companies take every part of what they do with seriousness and with an approach to, like, with craftsmanship. And that includes advertising and taking that seriously. And I guess that's kind of maybe in some ways what I'm reacting to with the Coinbase thing. The QR code from a few years ago is the same thing. Like, it just doesn't suggest any craftsmanship or seriousness at all. And like, it almost makes me kind of recoil because it's like, and I'm not sure I'm the only one who has this opinion or this feeling, when you see someone almost waste money flagrantly on Super Bowl advertising, it kind of gives you the perception of like, how much money do these people have? Like to spend the money on that, how much money do they have and how serious are these people? And I continue to get that vibe. And Coinbase is kind of like the paragon of this to me with at least this Super Bowl. So I found that off-putting on a number of levels, and not just because I'm sort of a fintech crypto of that space. All right. So now we're going to run through a little faster our remaining three awards. Jane, give me your most cringe.
Cringe to the point of soullessness, like making my soul leave my body. I honestly don't even know what the brand was because we have this shared hate of gambling apps and prediction markets. Yeah. But the Kendall Jenner ad where she's on a private jet saying, "How do you think I got this money?" Wildly irresponsible. Disgusting.
Yeah.
Oh, in fact, I will bundle all of them in there together, like the DraftKings and that just, it was gross on a level that I found, beyond cringe, but definitely into. And I mean, you kind of expect the goofy, cringy stuff. So that's kind of part of the fun. So I'm going to let all of the goofy, cringe ones go and just go hard for the Kendall Jenner. If that even is which one it was, I don't know the difference between the different Kardashians. So I think it was her. But either way, it was horrifying. What about you?
Yeah, it's bad. Oh, no. I mean, I totally agree with that. Those ones were horrific. The one that was more goofy, cringy that I would say wins this award, but also to your point, not like in a bad way, just in a like, you might have wasted your money. I'm not sure this is really going to make a difference kind of cringe was, I thought the Salesforce Mr. Beast one was pretty cringy. And mostly, and you know, Mr. Beast is doing like some kind of puzzle where you win $1 million or whatever. Like, I'm sure that will be interesting, but it struck me as like a very old and out of touch brand trying to connect with the youth by going to the person that they think is the most famous person, but getting to that person like much later than culture had already gotten to that person. It was like a very sort of like trying to keep up with the kids kind of thing. And
the Gen Zs in the room with me said, "Wait, who's Salesforce?" So that was funny.
Right.
They loved the Mr. Beast part of it.
Oh, sure. Well, and the Mr. Beast stuff, like, you know, I don't blame him for cashing in on this stuff. Like, actually, this morning it was reported that he's buying Step, the fintech app. So like he's going for it, and that's, you know, totally fine. But Salesforce, I don't think got quite the lift off of that maybe they were hoping for. Even with Mr. Beast saying like, "Slack me the answer" or whatever, it's like, oh, come on, like this is not going to work. All right, most wholesome, Jane Barratt.
Oh, it's got to be the Clydesdale with the baby eagle. Come on.
I knew you were going to say that one.
I feel bad because like Budweiser sales have been declining year on year for so long, and it'll be just such a sad day when the Clydesdales go away. But loved it. It was adorable. Come on, what was there not to love about that?
I loved it too, and I was pleasantly surprised that they did a real life tie-in and had a Clydesdale with an eagle on its back, like at the game, seemingly. So that was cool. I like that one a lot. I'm with you on that one. I will also shout out the Rocket one that was won't you be my neighbor, where they were like, that was nice. That was a good, like, people moving to a new location and then making friends and because like just showing like how neighborhoods are formed kind of thing. I thought that was very well done.
I only took a point off for them because I loved the Lady Gaga recording, but they didn't need to do that. Like they could have given a fraction of the payment to someone else to sing it well. Like they didn't need to do that.
I agree. No, we'll save the money. Amazing. Would be no. I agree with you, and I will also say on that front, they got a little half-point deduction from me at the very end when it said Rocket/Redfin.
Yeah,
like that was just too
confusing.
Much. Like just go, just go like one or the other. Like you don't need to do both. All right, and then finally, Jane, I think my favorite award, the I Liked It award for the thing you liked that maybe cuts against consensus a little bit.
Okay, so there was one that I liked, even though the other part of me hated it, which was the Lost Doggone Ring. And then I thought it was adorable. And then I was like, oh, but wait, like the potential for abuse here and privacy is horrific. So I have managed to argue with myself over that, but I still like it. I liked it as a concept. But I think because I was with a bunch of skiers, the Michelob Ultra ad with Kurt Russell, like I thought it was adorable and charming, and the skiers are like, "Oh, come on, that's not possible." So it's very cute. What about you?
Funny. Mine was it's like a small weird one, and I don't know if it really worked that well for him, but the Squarespace ad where Emma Stone was trying to buy her URL. I just enjoyed it. Like, and I think it's mostly because I like Emma Stone and just like seeing her in kind of like a Victorian setup, just like throwing laptops against the wall. I just like purely the aesthetics and the vibe of like watching her freak out on screen for 15 seconds. I enjoyed.
See, if I was in the room with you, I would have wildly disagreed. I thought it was stupid because it's also like 5 years too late. Do you own alexjohnson.com?
Right.
Do
well,
you?
I mean, like Squarespace, I know. I don't.
Oh, there you go. Maybe that's
I've looked, yeah. And I think I had an Emma Stone reaction, just threw my laptop against the wall. I mean, the domain stuff is so stupid. And I will say, so like, old. Yeah. I enjoyed it, but it also feels very like 2009. And on top of that, I had to look up which one it was. I knew it was the Emma Stone ad, but I didn't know it was Squarespace. So I don't think it worked that well, but I did enjoy it. All right. So, Jane, more broadly speaking, now setting aside the individual awards, that was fun, by the way. I'm curious. You mentioned the financial services and fintech and crypto sort of advertising. We saw a few. There weren't like a ton, but we had Coinbase, we had Ramp. It sounds like you had some bank ones. How would you sort of analyze the current state of like financial services advertising and kind of like the zeitgeist with consumers and how consumers are feeling about all this at the moment?
Honestly, it was my biggest, like I usually place bets, again, with the other nerds around who's going to be in the first set of ads. And it's, beer, cars, banks, or pharma, right? Who's coming first. Yeah. And the fact that pretty much there really wasn't many of any of those was pretty wild. I think the lack of, especially large institutions, usually they will show up, right? They can afford it. They have all the money, right? Yeah. So the fact that there wasn't any sort of any play to a financial services audience, I thought was honestly shocking, given its wild overconfidence in the competitive landscape, which may be that. But yeah, the lack of national banks or frankly custodians or investment houses blew my mind. I remember E-Trade Baby, like this was a very hotly contested market over the years. So I thought their very absence was extraordinarily interesting. And frankly, no big fintech either, right? Chimes showed up in other years. Like I thought it was fascinating, the sort of absence overall, and leaving that space open for crypto, which again is kind of a weird thing to do. Like you don't just play offense, you have to play defense too. And so the fact that the conversations around money were much more crypto based was weird. I thought the Trump accounts, tangentially related, the Trump accounts ad was great. Loved it. Like I think it was a really good, and again, any of the large any institution can tell that story. Invest in your family, put money away for tomorrow. Like that shouldn't just have to be government spend. I thought it was that was a really nice ad. But the fact that the banks only showed up on my local feeds literally blew my mind.
That is pretty interesting. I mean, I do think you're right. I mean, one of the things that I see as like a consumer sentiment thing that's not maybe necessarily translating to like bank and fintech strategies right now as much as it should be is there's a tremendous amount of like uncertainty and anxiety as it relates to like the economy, like broadly right now, right? And I would think that at a moment like that, you might think as a large national bank or a large fintech company or a large fintech company that recently acquired a bank or what have you, that like it would be an opportunity to position your brand as like, you are safe with us. Like we know the world is crazy. We know all these things are changing. You could even tap into like AI anxiety and like economic dislocation and all of these different things, cost of housing. Like you could tap into a bunch of those things and then sort of counter position your brand as like, we're the safe place. And you could even imagine that working particularly well, like, we're a bank. We've been around for 180 years. Like that's why you should trust us. Like that stability means something in this moment. And to not see anyone try that, I did think was pretty notable and pretty interesting. There was a real lack, honestly, of consumer stuff because even like Ramp, like that's a business audience. Salesforce, that's a business audience. I mean, like a lot of the ads were more targeted at like business decision makers who just so happen to also be watching football. It like consumer financial services, apart from Coinbase, there was like nothing.
Yeah, no, and it was notable like that the junk food ads, which, Doritos, M&Ms. The years past, you would have a ton of junk. Again, no judgment. Everyone's welcome to their junk. But the fact that, we are seeing on a sort of consumer spend perspective, especially with the rise of GLP-1 medications, the consumption of those is going down. So the fact that there was, I think, 2 GLP-1 ads and way less junk food consumer ads was pretty interesting. But yeah, banks, cars, like things that are always those big consumer staples being missing is, you're 100% right. It was a missed opportunity.
Yeah, I mean, I wonder if it does sort of indicate, this might be reading too much into the strategy that these companies have, but like, I wonder if it does indicate them sort of getting ready for like a slower period of consumption on some of that stuff, where they're just like, look, like, this is the type of brand advertising we like to do either when we're trying to climb out of a trough or when we're like riding high, which was crypto in 2023 or 2022. I wonder if like GLP-1s being a good example, if it was like, look, like we have to reposition ourselves for an era in which people are just going to be eating less of these foods, or, car companies, we have to reposition ourselves for an era where people are hanging on to cars longer or buying used cars. I mean, it almost felt like sort of a maybe slightly doomy window into like the next couple of years of the economy in a strange way. Does that make sense?
I mean, it makes 100% sense. Like my whole first career in that world, like the ad industry is the leading indicator for recessions, right? That's what gets cut first is marketing spend.
Right.
Deeply depressing because it's also a time when you can gain share if everyone is cutting spend. So I think the bigger picture, whatever consumer spend is like 72% of the whole GDP, right? We have a real problem if that's what we're seeing is less and less spending across the board. So it definitely had a sense of, not so much like the doom spiral, but like, wait, something's missing here. What is that? And
No, I think that's true. And it does give at least one cause for at least pause, I think. The flip side, of course, is that AI may save us, Jane. Like, I mean, yes, traditionally,
AI is going to do all the spending, apparently.
like consumer spending, blah, 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 blah. But like, what about AI? That's what's propping up the economy right now anyway. And we did definitely see that, right? Yeah. So there was, by my count, obviously there was the Google ad that I mentioned before. OpenAI had an ad that they ran. Anthropic had an ad that they ran. The one that I don't even remember the name of that won your waste of money one ran an ad. So like AI was sprinkled across quite a bit of the advertising, either somewhat indirectly or more directly. And I wanted to ask Jane, I mean, we talked before about like ads that work for normal people versus ads that sort of speak to like the inside language of the industry that they're in. Did you see the Anthropic ad?
Mm-hmm. Oh, I loved it so much.
I thought of you the first time I saw it actually last week before the Super Bowl. And I thought of you immediately because I really like it too. I think it speaks to something very like essential about advertising. If folks haven't seen it, we'll drop links to all this in the show notes. But the gist is the one that ran in the Super Bowl the one where they're talking to the therapist? Is that the
no? It's the personal trainer. Oh, I saw the personal trainer one. I need a six.
Oh, the personal trainer one. Yeah. So the personal trainer one was basically like this kid who's trying to like kind of get stronger and is chatting with like a kind of muscled up like personal trainer guy who's giving him tips and techniques, and then like towards the end the like demeanor of the personal trainer sort of bot that's responding to this person's request completely changes. And then they start advertising some like loosely related but irrelevant product in a really cringy way. And then the kid is like, what? And then they actually built a whole series of these ads across a bunch of different examples. There's actually a financial services one. I don't know if you've seen it yet, Jane, but it's like a woman sitting in a diner and like mapping out her small business and talking to an AI agent. And the agent's like, I think this is a great idea for a business. Here's some things you could do to start with your business plan and like figure that out. And then it's like, oh, and if you need financing, you could get financing from paydaylender.com or whatever it was. And like very like kind of this very strange way of inserting ads. So I wanted to ask you a couple questions about the Anthropic ad and then sort of AI more broadly right now. On the Anthropic ad, I think there's a couple of different ways to look at it, right? One is that it is pointing out like this very like legitimate concern I think that people have about the relationship they're sort of building with these different AI chatbots and how business models might interrupt that relationship or change that relationship. So I thought it was a very fair point from Anthropic's point of view. On the other hand, I also did hear, and this might just be Cope coming from the tech AI ecosystem, I'm not sure, but I did hear that there was some feedback from like people who are less familiar with AI that they didn't quite get it enough because like the ad was parodying the sort of awkward way that AI talks, right? So like you ask it a question and it pauses for a second and then goes, "Great question. I'd be happy to help you with that." And like the ad like nailed that. But I heard from some folks that who are less like enmeshed in the world of AI and use these tools less, that part didn't land as much because they're less familiar with the tone of AI. And therefore, like the larger message kind of got lost a little bit. And it was like Anthropic and Claude advertising sort of a negative, like we don't do this thing that others are soon going to be doing. What did you think overall of the ad?
So super charming. And again, this is my inside baseball take, which is when you're the underdog, like ChatGPT has way more users, way more users.
It's like 800 million users globally or something crazy. Yeah.
So when you're the underdog, I think this is an absolute fair strategy.
Totally.
I had not heard that some people didn't get it, but that's okay if they're not using AI at all. It's usually about share, right? You're just trying to get share. Like you're not trying to get new smokers to smoke. You're trying to get them to switch was always the justification for cigarette advertising. But having history in the industry, we're in a moment now with AI, which was the early days of social media. Right? You have the 800-pound gorilla and like, we're not going to do ads. Ads aren't cool. Remember that from The Social Network? And it started with, a C frame of a top banner and a side banner and a bottom banner. And it quickly devolved into just straight up data sale and predatory, data brokerage. So I think taking a strong point now and for Claude to differentiate themselves from ChatGPT and others that are going down the ad route, I think was very smart. Even if you don't know, like if that's what you remember is, they're the ones that don't sell, then that could be a very good thing. Yeah, but I also thought it was very weird that OpenAI pushed Codex and not ChatGPT. Like, again, it was like build. Like, I thought that was a very strange, and it was so techie that any regular human would be just like, wait, I have to build my own stuff now? Like, who was that actually for?
Right. That's a great point. Like, because OpenAI's ad was like, you can just build things, right? Which is a very famous saying, but it's only famous in like tech VC circles. It's not famous among normal people. And so I think you're right that like OpenAI might have leaned a little too hard in the wrong direction. The other thing I thought was strange about the whole thing was obviously Anthropic released its ads before the Super Bowl, which is a common strategy to like bring more attention to it. And OpenAI helped them by, I think, massively overreacting to the ads and getting all mad about it and posting about it. And Sam Altman has been talking about it. And I think, Anthropic clearly touched a nerve, I think, with OpenAI and with sort of the larger OpenAI ecosystem of tech VC people. They're like, hey, man, like, why are you, I think I saw some line of criticism that was like, why are you trying to sour people on this technology before the ads have even shown up in the thing? But I tend to side, I think, a little more with Anthropic on all of this, which is just to say that like, okay, is it possible that the first iteration of ads put into ChatGPT will be very like light touch, not intrusive, very clearly warned like, hey, this is an ad? Like, will it probably be implemented that way day one? Yes, I imagine it will be. But, and this is, I think, gets to your point about social media and Google and just sort of the trend of enshittification, like largely over time, I really worry that the temptation with ads within an AI context will be to do exactly what Anthropic is warning about, which is to intercept high value intent as early in the process as possible and distort the journey from there towards whoever's paying you the most money. And like, yeah, I don't see a world in which we don't end up with some version of what Anthropic is kind of warning us about, where it's like, hey, you want to start a small business? Great. The first thing you should think about is financing. And here's who you should look at for financing. I mean, I worry about this. And I guess, Jane, the thing you are really good about all of like the data broker, data privacy, data monetization, all of that kind of stuff. Like we have huge concerns there from an AI perspective with the amount of data these things are collecting. But I also worry about the user experience and the context. And what I mean by that is, I'll contrast it with like Instagram, right? And I'm not going to defend Meta by any way, shape, or form, because like probably the worst company as it relates to data collection over the last 20 years. But I will say that one thing I hear pretty consistently is that Instagram in specific, the ads don't annoy people nearly as much as they do in ads in other places do. And I think one of the reasons for that, this is my theory, I don't know if it's true, but my theory is that like people go to Instagram to sort of like aspirationally shop for a better life. And so ads that are sort of tuned to that purpose of going to Instagram work very well and don't feel intrusive in the context of why you're there. However, the thing I worry about with like AI chatbots is these things are trying to present themselves as like your therapist, your coach, your lawyer, your teacher, your friend. Like they are trying to present themselves in a very anthropomorphized, just offering you help context. And I think in that context, advertising is very bad and very dangerous. And I feel not at all relieved whenever I hear Sam Altman talk about like, oh yeah, we're doing ads, but it's not going to be like that. Like that's not my lived experience over the last 20 years of seeing this play out in other domains. What do you think?
100% agree. I think it is, and if you look even at the evolution of Google, where it was very clear from search what was paid links and what was not. Like paid search, organic search. Mm-hmm. That line, if it is more like interruption advertising, like this is brought to you by paydaylender.com, right? Mm-hmm. Then A, it'll be a crappy experience, but B, at least it will be a little, more quid pro quo. I get it. I'm getting this tool for free, and now
it'll be more clear.
Payday.com is selling that. If it is purely like whether it's pay to play or it is just someone's figured out how to do agent optimization, like the search for agentic commerce, it is a really dangerous thing in that like people have no problem spending money. Let's be really, really clear, right?
Yeah,
and
right,
so
right.
if you're presenting something, I've clearly got a need at a time because I'm engaging with AI to solve my problem, to give me ideas. And for something to be presented as here is the answer to your idea, it is it just becomes a wildly unlevel playing field from a competitive perspective. And obviously we have many laws and the FTC in place to make sure that there is like fair competition. And this actually has the capacity to really uproot competition in a pretty dangerous way.
Yeah, I agree. I mean, I just think like the way you described that is exactly right. I mean, most of the time when you're getting ads in other places, the ad is like additive to this other thing that you're doing. Whereas I think the danger with it in an AI context is like people go to AI for the answer, like for the output, right? Like it gives you the thing. It doesn't give you a link to go look to see if you can find the thing. It gives you the thing. And so I think that like and this is why advertisers would be interested in it, right? I mean, like the early reporting is that OpenAI's pricing that they're quoting advertisers for the kind of simplistic version 1 of what they're rolling out, like it's equivalent to what you pay for like ads on cable TV or ads on Netflix. Like, I mean, it is like top tier advertising. And it's because like people are going to these things for the answer. Like it is the most direct way to say, instead of going through door A, you should go through door B. And the other thing I think about sometimes with this stuff is I think there's a real distinction between people who grow up before these things versus people who grow up after these things as well. And so, I think it's very clear looking at like the AI companies, they very much would like people growing up now to think of AI as just a tool that they use all the time and rely on for everything in their life. And like that, as a parent, I will say that scares me on a number of levels. But one of them is like, how do you distinguish between what the right answer is and what the answer is that some commercial interest wants you to think is the right answer? And, the way that you could, and again, not to say OpenAI will do this, but the way you could integrate advertising into AI chatbots would make like Google advertisements seem primitive by comparison, right? I mean, like you can just blend these things together in a way that's much more targeted and much more valuable to advertisers, but potentially much more dangerous.
Yeah, and I mean, people often ask me, how did I end up in fintech? And it was a very deliberate move from that industry when I saw the rise of ad tech, right? And I was on, it was a big holding company's digital advisory board, and I would have ad tech after ad tech coming in and just be so excited about just how much value that they could just extract out of the ecosystem without giving literally anything back. Because remember, these are, ad tech intermediaries. So they took money from the media providers, right? Magazines, TV, whatever. They took money from the creative side of the business and just amassed both power from a massive value extraction perspective without really adding anything back. And I think we're in that moment now of, will these tools be used to actually add value, or will they just be a rocket ship to value extraction?
Yep. No, I agree. And I think the last thing I'll say on this front, before I transition topics a little bit here at the end, is I do think we also need to be aware of like the larger economic questions surrounding all of this, right? The amount of money that's being spent on AI right now, like people are like, oh, well, maybe they won't do this because like, even though they could make a lot of money from it, it's not in long-term interests of like the product and the value to their users. And like, theoretically, yes, that's true. But if you owe someone $50 trillion, you're going to sort of pull on every revenue lever as hard as you can to pay that money back. And we're very much in the early stages of the AI build out and all the money being spent on it. But, you already see like AI labs and others kind of moving some of the financing for what they're doing off balance sheet and finding tricky ways to sort of hide the money. And I think that's indicative of the fact that we are reaching kind of an outer limit of, we can't pour that much more money into this thing, into building this godlike intelligence that we're all chasing after without starting to have it make like actual economic sense. And, for better and for worse, advertising is the way that we make a lot of things make economic sense, usually for worse. And I worry that like, even if there's a better way to implement this and a worse way to implement this, the just gravity of AI financing will demand at some point that we implement the worst version of it.
Yeah, and I think we are at a moment in time where the tech is moving way faster, even than the .com. I've held back on talking about pets.com and all of that, and which had a massive impact on the entire economy, right? This wasn't just the tech sector. The entire economy was deeply impacted. So we are at a moment in time where I think the tech moves quickly, people's like consumer behavior moves quickly, but we don't necessarily have frameworks, right? If you think about what power we are giving to AI tools, and I'll just talk about it in financial services context, if we have read access, right? Go and check my account balance and update my budget and tell me if I can get this thing. And like read access is a pretty powerful tool. Where is the frameworks around right access? Oh, yeah, I went and checked your accounts, and actually I think that your 401k would be better off spent in a meme coin, so I moved the money for you, right? Yeah. So I think when you look at some of the health apps that have come out recently, they are coming with warnings to say once you update your health data into this application, you're no longer covered by HIPAA. We do not have the equivalent in financial services. In fact, I mean, it is a segue into open banking. We can't even basically agree on just how to protect and share data at the most basic level without applying it into AI.
Yeah, no, that is where I want to go next. You're absolutely right, though. I mean, the if anyone's been looking at like the Claude bot experiments, where people are putting a version of Claude on their own kind of like Mac Mini machines and then just giving it root level access to their life, like it's kind of fascinating from a science fiction perspective to watch it all play out. But it's really easy to see, like, oh yeah, I decided to move your bank account from this bank to this bank, or just like letting these things run wild. We're going to see a lot more experiments with read access and write access, and we're not anywhere close to having a governing framework for doing that responsibly, outside of maybe agentic commerce, which of course we want to enable because we want to help people spend more money. So like I'm finding myself frustrated with the speed at which things are evolving and the direction in which things are evolving, which is a perfect segue, Jane, to 10 minutes of open banking talk, if I can tempt you into that. Okay, so I dip in and out, but I luckily have other areas I can spend my time. You are like trapped in this forever hellscape of regulatory mirrors that you can't get out of. I did get the chance to hear you and some of your colleagues in the open banking space speak last week at the Fintech Exchange event in Salt Lake City. And you guys did a good job of kind of explaining the history of how we got to where we are. Where would you say we are right now if we just wanted like a status update on open banking in the US?
So at a macro level, we have fantastic levels of adoption, right, in terms of moving data sharing away from old school credential sharing and screen scraping into API access. And people argue around the number, but let's call it somewhere between mid 70s and mid 80s% in terms of core retail accounts that can be shared, with high levels of security and permissioning and controls. So we are at a adoption level for core retail in a really good place, and that has been industry led. Where we've needed regulatory intervention is to be able to close the gap. So it is, again, adoption across the board, as well as broader use cases. Right? Again, great that I can share my retail accounts. I really care about my investment accounts. I really care about other stuff too. So we're in a place where a rule had been talked about, drafted, discussed, letters submitted, argued over for many, many years. This was probably a 4+ year journey when it was formal, and much longer in an informal space to get the Consumer Finance Protection Bureau to come out with Dodd-Frank, 1033, an actual open banking rule. So that came out at the end of October 24, and then with the new administration in early 25, a lot of the CFPB work was being rolled back, including this 1033 rule. As the year progressed last year, there was a few things that happened that caused the Bureau to go, oh, actually, maybe we do need this rule, but let's fix it. And since then, it's been a lot of back and forth between the industry, between the Bureau, to say, okay, what does this rule need to be? There was a rumor there would be a rule when the Bureau was officially running out of money, late December, early January. They got some money. So now that they've pushed, what we've heard is pushed that out to say, we're still working on it, but there will be a formal process, which is, a proposed rule being put out, comments, and then lead into final rule, which is abbreviated version of events. But the headline is we're still waiting to see. And while everyone's still waiting, the industry moves forward. Like the US is, again, the only market that has been so successful in an industry-led approach without regulatory intervention.
Yeah, it's interesting, right? I mean, to that point, I've been thinking about like where this all lands, right? I'm sure you guys, you've probably spent your entire life just wargaming constantly, like where do we end up? Where's this going to go? And it does seem interesting to me because at a macro level, I think like what the industry does will ultimately end up kind of setting the rules plus or minus 5%, right? And so, there are things, I think sometimes this comes up with like secondary data use or liability or third-party risk management, where it's like there's kind of a theoretical discussion about the rule and what the CFPB could do legally from its authority under Dodd-Frank Section 1033. And that like is almost an abstract discussion that is interesting to lawyers and regulators. And then there's this sort of reality of like, well, okay, how does this have to work to enable the use cases we want to enable? What do we think consumers would actually be comfortable signing up for, and what would they not be comfortable with? And like, how do we share risk and liability across different participants in the ecosystem? And one thing I've noticed is a lot of those like on the ground realities have kind of continued to diverge further and further away from the rule and potentially whatever the new rule is. And I guess I'm curious, like, do you have a sense of when we land with a new rule? I mean, I've heard everything from like they might try to change some fairly significant stuff from the old rule to the new rule to it's going to be very similar with maybe a couple of tweaks. Do you have a sense of like how far off from the rule we have today a future rule might be, or is it just completely up in the air still?
Yeah, I think it is foolish to try to say what's going to be in there. I can say what I hope to see, which is something which is very, consumer-centric. Like, let's actually start with the humans and their right to access their data and share it with companies who they want to do business with. Like, at the core, that's, that has been, the basis of the entire rule. And even that basis had been up for argument with some industry players. I was
going to say, there were some kind of absurd arguments that were being made, like, like the statute actually meant being able to download all the copies of your bank statements and like electronically send a file. It's like, are you out of your mind? Like,
because it was
that's
also
not even
written
how it worked
like
at the time.
16 years ago, exactly. And you couldn't do that then either.
Right.
Yeah, but
no,
I
totally.
think starting with the human at the center of it, but definitely an eye around competition, because what we have now, this sort of 70 to 80+% adoption, it is the larger participants in the marketplace who have been able to invest in it are reaping the rewards from having this great flow of data. And it's not just data out. This is bidirectional data. Generally, if you provide data out, you're getting data in, and the average American has 5 to 7 accounts. Guess what? Just with math, you're getting more data in than you're giving out. So, and that is I always say it's like the single best and cheapest source of R&D. What are your customers doing that they're going elsewhere for that you can't give them? It's like you don't really need to spend a ton. You can literally just watch the data flow. So I hope where the Bureau lands is, preserving the goodness in the ecosystem. There is a lot of goodness, a lot of great work has been done, but just clarifying some of the anxieties between the different players with an eye to, again, competition and consumer centricity.
Yeah, I mean, I wrote about this in my newsletter recently. I think one of the big sort of themes of 2025 was the real noticeable lack of a regulator trying to sort of enforce some level of fair competition, right? And it's funny, I mean, we've talked about this earlier with the FTC and with, kind of this like desire for a competitive ecosystem. Financial services is tricky, right? Because like even at an FTC, like DOJ antitrust level, there are nuances to how financial services works and the competitive dynamics in financial services that was always one of the things I really liked about the CFPB kind of pre this most recent iteration was like they were very thoughtful about studying the competitive dynamics specifically in financial services and thinking about like, what could we tweak to give the consumer a better outcome? And you can argue with the specific rules and initiatives and things that they did, but I liked that there was someone who was very like in the weeds about it, thinking thoughtfully about how do we spur more competition. And it does feel like for the moment we lack that. And I think a worry you and I share, Jane, is, the more this kind of gets dragged through regulatory uncertainty, the more we see a division between the haves and the have-nots in terms of like open banking adoption and using this, because I think you mentioned this on the panel you did last week, the biggest banks aren't stopping on this. Like they're not letting regulatory uncertainty slow down the investments they're making on data out, data in, use cases, their relationships with different counterparties in the ecosystem. Like they're working actively on all of that to shape the on-the-ground reality. And the concern, I guess, is if you're a smaller fintech company or a smaller bank, like the worst thing you could have been thinking over the last year plus is, open banking is not really a thing we need to worry about right now.
Yeah, and I always talk about it in the context of an individual, right? If you've got your 5 to 7 apps and 2 or 3 of them are lightning fast and beautiful permissioning and like work great every time you turn them on. And then the others, you get that spinning wheel of death and you've got to like re-enter credentials and you're never quite sure what's happening and your balances aren't right or you're missing payments. Like these are not just user experience. Like you can have real life impact outcomes for this. How long will it take before you go from the, the have-nots to the haves, as you put it? Because, human tolerance doesn't last that long. You may love your little small community bank, but if the digital tools don't work because the data's not good, how long are you going to be okay with that? And the economic implications of that are absolutely enormous. You start to see a flight of assets from sort of Main Street community banks up into the trillionaire banks. Like that has a real impact on, the ability to lend in the smaller communities. So, it isn't just a data nerd thing. This is actually a big economic issue. And data nerds too.
Well, I was going to say, you need like a t-shirt that says like, this isn't just a data nerd thing or something, because I feel like that's a common refrain. Jane, as always, a delight to talk to you. Thank you for sharing both your fintech and open banking expertise, as well as your advertising expertise.
Thank goodness we could talk about something other than open banking for a hot minute. It was amazing.
I know. That was very fun, and gave me a good excuse to pay attention and take some notes during the game yesterday. Jane, thank you very much.
Thank you, Alex. So fun.